Hi, we're back working on preparation for Exam 3. Exam 3 is over, chapters 5 and 6. I'm working the questions from Exam 3A. That's out in your study guide part of Blackboard. So, question 3A, 12, is preparing an income statement. So the key to knowing how to prepare an income statement, and especially a multiple step one like this, is knowing what accounts go on the actual financial statement itself. So the first thing I would do when I'm confronted with a problem like this is go through and just draw a line through everything that you know is not going to go on that income statement, or circle the things that you are going to put on there, whatever works better for you. So I would go through the accounts, and when you take your test you may have some slightly different accounts. Obviously, if I'm asking you to prepare a multi-step income statement, there are going to be sales, returns and allowances, discounts. There's going to be some expenses, right, that have to be on here. Now the other random stuff, the assets, the dividends, the things that don't belong on there may change. You know, instead of interest payable, maybe I'll have salaries payable. You know, it could, these numbers will be different and the accounts could be different, but certainly the accounts required for an income statement will all be present. So if you can learn how to pick those out and ignore the rest, you'll be way ahead of the game. Alright, so one of the things that makes accounting a little bit confusing is that things have similar names, because dual entry accounting, the nature of accounting is that for many things that are expenses, there's also forms of revenue. For many things that are assets, they later become expenses. So they'll have similar names, which makes it a little hard to keep track of. So that's your main thing to understand and memorize, I think, for preparing this problem, is knowing that merchandise inventory is an asset. It goes on the balance sheet. Right, that's your stuff in the warehouse, your inventory. Right, that's the stuff you're going to sell. But it's still here, it hasn't been sold yet. Cost of merchandise sold, that's your expense. Right? So that is what's been sold, and now you have the expense of what you paid for it. So revenues and expenses go on income statements. Assets do not. Assets, liabilities, and stockholders' equity accounts all go on the balance sheet. So make sure you've memorized which are which. So merchandise inventory is not going to go on there. Sales, yes, definitely sales. That is our form of primary operating revenue at a store that's merchandising. So we're definitely going to keep sales. Cash, no. Cash is an asset. For some reason, people are still wanting to stick cash on the income statement. Cash is not revenue. Cash is an asset. It's your cash in the bank, or your cash in hand, your currency. It's an asset. Draw a line through cash when you're creating an income statement. Keep it for balance sheets. Cost of merchandise sold, yes, definitely. That is our main expense. We're going to break it out separately because it's so important to merchandising, so that's why we break it out separately. Dividends, nope. Dividends go on the retained earnings statement. They're kind of an oddball thing. People are always wanting to stick them on the balance sheet, but they don't go there. They really and truly only go on the statement of retained earnings, so you don't need them. Interest payable, payables are liabilities. They go on the balance sheet, right? But again, that's confusing because you could have interest expense. You could even have interest income. So you have to make sure you're reading things real carefully to properly classify these accounts. All right, administrative expenses. Oh yes, SG&A, selling, general, and admin expenses get broken out separately on our multiple step income statement. So we're going to keep that. Interest expense, yep, that's an expense, so it definitely goes on an income statement somewhere. Retained earnings, no. That is a balance sheet account, and it also appears on this course, the statement of retained earnings. Unearned revenue. See, this is one of those tricky things. It's got the word revenue, but it's not actual revenue that's come in. It's a liability. We owe somebody some work. So when you see unearned, revenue. That's not revenue. Doesn't go on the income statement. Sales discounts, yes. Remember, because we're doing the financial statements for a merchandising business, it's important to track, well, how much discount are we giving out? How many things are getting returned, right? And these are going to be subtracted from our sales, so we definitely want those on our multiple step income statement. Selling expense, oh yeah, definitely want that. Store supplies. Okay, so this does not say expense after it. This is an asset. This is store supplies. So we're going to draw a line through that. So now we've got everything we need to prepare our multiple step income statement. We've got our sales minus our discounts and allowances. That'll give us net sales. Then we can take out our cost of merchandise sold, which will give us gross profit. Then we could take out our selling and administrative expenses to come up with our operating income. And finally, we have some interest expense that we can take out. So, great, we're ready to set this thing up. And keep in mind that on the exam, instead of interest expense, maybe you'd have some interest income, right? So maybe you'd have some rent income, some additional kind of revenue that's not sales, right? So keep that in mind. Just FYI, these accounts will not be identical to this, all right? But I'll tell you what will be identical is the heading that you put on your financial statement. The only thing that might change might be the name of the company, all right? So in this example, the CC Drivers Company for the month ending March 31. Great. So you start with whose income statement is this? CC Drivers. Right? What is it? It's an income statement. And it's for the month ending March 31st. 15. All right. This is worth a point. If you can't even do an income statement, write your header down so we know what you were trying to do. Give everything a shot. I give partial credit. All right. So the first thing for this is revenue from sales. And we have a couple of things going on here. We have our sales, and we need to net that out with our sales returns and allowances and sales discounts. So sales is $1,535,478. And I am just going to go ahead and draw my 3 columns here. Alright, so that I don't get messed up. You can do that if you want, or not. That's up to you. Alright, so revenue from sales is $1,535,478. Alright, so there we got sales. Then we take less sales returns and allowance. Right, sales returns and allowances, which are $214,897. And less sales discounts. Should we use that? $32,487. All right, and we're going to total those up. $247,384, which is going to give us what we call net sales, right? So that's our first little calculation. Net sales. And you'll recall this word net means net of something. So in this case, it's sales less returns and allowances and discounts. All right, so that's going to become 1,288,094. $288,094. Great. Now the next thing we're going to do is take out cost of merchandise sold, because this is a merchandising business. Cost of merchandise sold is super important, right? We want to track that separately as a special expense. Cost of merch sold. So that is $734,567. And we call that gross profit. Net sales minus cost of merchandise sold is gross profit. And for this particular store, CC Drivers, the gross profit is $553,527. That's great. So we break this out separately for stores. You may recall on just a regular income statement that's not multiple step, we just put all the revenues, then all the expenses. But because this is a merchandising business, because sales to cost of merchandise sold is so important to keep track of, we're going to track it separately. All right. Now we take out everything else. The expenses that are related to operations first, right? So expenses, we have selling, I always call it SG&A, selling, general, and admin. So selling expenses, $125,443. And admin expenses of $144,789. Those total $270,232. So we add these and we get our total expenses of $270,232. Right? And when you subtract $270,232 from the gross profit, right? So you take this $553,527 minus the $270,232, that gives you income from operations. Which is important. We want to break that out separately. So 553, 527 less 270, 232 is 283, 295. All right. Now, that's not the only thing that happened here. So operations from running our store got us 283, 295. But you'll notice we also had this non-operating expense, right? Interest expense means we've borrowed money and we've paid interest on that. But that's not an operating expense, that's a financing expense, right? Because, I mean, if we hadn't financed stuff, if we just paid cash, we wouldn't have that. So it's not really operating, it's financing. So that we're going to put separately. But there might also be some other kind of revenue. Like, let's suppose you rented out a spare office in your store or something. So you have some extra rent. It's not really your primary business, and your store is not renting out a spare office, right? So anything that's not from operations is going to go at the bottom. All right, so we're going to call that other revenues and other expenses. And here we just have an other expense. Which is interest expense. right? And it's 24,587. And of course, the bottom line of our income statement is always going to be net income. So this 283,295 less the 24,587 is 258,708. And that's our net income. And that's your multi-step. Making sure you're taking your sales and net out, returns and allowances, to get net sales. Then immediately take out cost of merchandise sold for what we call gross profit. Then your operating expenses. Then anything else that's not really operating the store. All right, good luck with that. Practice those. And next video will be on question 13. All right.